Perfect, Nick. Thank you so much for joining us today on the podcast to talk about your book, How the Euro Dies. So I'd just like to start by asking sort of what was your motivation for actually writing the book?
Yeah, it was a slow and steady run up. Writing the book only actually took about 2 weeks, believe it or not, because I'd done a huge amount of research in the preceding months about the topic. And I'd written a few research reports about the topic, which made the predictions in the book. And there was a whole load of stuff that I had to cut out of those reports because they were getting too long. And so putting it all together into a book was strangely easy and happened strangely fast. So it's my first book. I haven't done anything like it before. I've written lots of research reports, but for some reason it all came together really, really well and really, really quickly. And the motivation was just the fact that I wanted to tell the story of all of these things that I'd found. I wasn't a Eurosceptic when I set out to write the book or to write the research reports that led to the book. So I wasn't, some sort of Brexiteer with some sort of hidden motivation or some sort of anger about it. And hopefully the introduction of the book actually explains that quite clearly. My background is not a Eurosceptic sort of background. And so I wanted to share this journey that I'd been on as a result of my research to write the reports. And hopefully the book does that.
Yeah, perfect. And I know a lot of people have sort of talked about the collapse of the euro currency as well. So why do you think you're different to a lot of those other people who've mentioned it?
I think there's a few parts of the book that are fairly unique, fairly different to any analysis I've seen elsewhere. And some of the feedback that I've had from the people who've read the book concur with that perception. So for example, I tackle the issue of Target 2 fairly well head on, which apparently a lot of the other books that are related don't do that because it's such a weird topic and so difficult to communicate. I also think I take people through a history of currency unions, especially in Europe, in a lot more detail than I've seen elsewhere. And I think that's really important. After reading that chapter and after writing it, I'm fascinated that anyone thought this could work because it's never worked and it's been tried so many times before. So the euro will fail just as all these currency unions in the past have. So I think Target 2 and the history side are the two parts of the book that I haven't found elsewhere. Also, perhaps the idea that the unholy trinity, which you might be learning about at university, that unholy trinity does apply to currency unions is a take that I don't think I saw in any other books or any places that I researched in detail. And perhaps there's a bit of a twist to that because I'm writing about something that George Soros did at the moment in a separate project, a separate report. And it's really relevant because he's a big name at the moment, but he's become very pro-European and pro-Euro, which is bizarre given that his history was all about the type of currency union project failing. So that's something that I've been thinking about at the moment. And I think that mention of George Soros and how he broke the Bank of England and the end of the ERM, that focus wasn't a big part of other books and other research projects. So hopefully that combination, and also what we got to with your first question, my background's not Eurosceptic. I hope that is a unique twist as well.
Yeah, perfect. So I was actually quite surprised reading through like how common monetary unions throughout Europe were. Like, we hear that the euro in Europe is it's quite unique and it's never been happened before. So sort of, are there any differences between what we're seeing now and the past monetary unions that might change it, or obviously you don't think so?
Yeah, there's always going to be differences between various different monetary unions. This is bigger, and I think the world has changed. But what makes currency unions fail, what makes them inherently flawed, has remained the same. And I think the fact that so many people during the creation of the euro, and so before the creation and after, explained that it wasn't going to work, and that they had told the politicians it wasn't going to work, and the politicians said, well, we're going to do it anyway because it's a political project. So I don't think that saying that the euro is inherently flawed and will fail is that controversial. And I hope that once people read the book, they understand why, but they also realize that it's not that controversial given how many people have explained it in the past, how many people explained it while it was being created. And so the euro is not unique. There's nothing different about it, according to the people that were involved in the creation of it, let alone people like me. There are unique things happening today, such as we're living in a fiat currency system. So It's not just a common currency. In a way, the gold standard is a common currency because gold is the reserve asset. So there's weird changes happening in the monetary system generally that the euro is part of now. But in the end, it's the few flaws remain the same.
Yeah, perfect. I think you mentioned it quite a lot in sort of the first chapter where you talked about the four factors of the euro's demise. Can you maybe explain a bit more about the four factors? And you mentioned that they only occur in Italy. So why is that?
Yeah, the focus is Italy in the book.
Yeah.
So we've got the issues: the exchange rate, monetary policy, capital flight, and politics. Right. So politics in Italy is pretty volatile anyway. They had an election 2018 where two parties were elected that were openly Eurosceptic, openly against the euro, and one promised a referendum and the other one promised to get rid of it. Now they since abandoned that, but they formed government. Those two parties, those two upstart parties. So Italy's politics is very Eurosceptic, or can be, and a big part of that is because Italy suffered worst under the euro's other problems, the euro's other flaws. So once you share a monetary policy, that means the wrong monetary policy applies everywhere. Once you share an exchange rate, that means the wrong exchange rate applies everywhere. And that's just because some countries within the group, within the Eurozone, are doing very well, and some are doing badly. But the exchange rate and the monetary policy is set in between. It's set at the rate that's good for the average. And that means there's divergence between the countries, because the countries that need a lower exchange rate and a lower interest rate are getting one that's slightly too high. So they're prevented from recovering. And the countries that are booming and need a higher exchange rate and a higher interest rate, they're not getting that, so their boom is not being reined in. So that's why we've seen housing bubbles in Spain and Portugal and Ireland before 2008, and we've seen the inflation of a German housing bubble since. The last issue, which is where Target 2 comes in, which is a key part of the book, is capital flight. It's the idea that it's sort of like a bank run, but on a country, right? So you've got a panic and money flooding out of one country and into another. And when you've got a currency union, that creates a weird setup because, all of these countries need to have money in them. Otherwise, their banking systems start to panic. And so when you've got, capital flight from country to country, then it risks a country having basically a bank failure, but it's the whole banking system and the whole economy within that country struggles. Meanwhile, where the money is flooding to is benefiting from all this hot money coming into that economy. And again, you get that divergence.
Yeah, perfect. Well, I think it's no better time to talk about Target 2. And it's something that's quite interesting. I've talked to a few people who are very prominent in finance, and they've never heard of it. They have no idea about it. And it sounds like that's quite common. So what is it? And why do you think nobody's ever heard of it?
Yeah, people don't like talking about it. That's part of the story here.
Under the rug.
One of the readers of my book emailed me to say that he'd read another book which is very prominent about this topic. I won't name the book or the author. And he checked the appendix or the index afterwards, and there was no mention of Target 2. And it's the key part of my book. And so there's this mystery about it. Nigel Farage is actually very interested in Target 2 as well. So I was very surprised by that when I talked to him about it when he interviewed me about the book. So part of the story of Target 2 is that people don't understand it, which is a really important thing to mention up front. It does not make sense. The first question in your mind should be whether it matters, right? And in the run-up to the European sovereign debt crisis, the run-up to the climax of it, a lot of people argue that it doesn't matter, right? So whatever it is, don't worry about it. And that was the ECB's line. But there was an analysis after the European sovereign debt crisis by the Bank of International Settlements, which concluded that it does matter, that deposit flight and the European sovereign debt crisis were connected to Target 2 in some way. So I think we established to some extent that it does matter. So what is it? Well, that's the part that no one can quite figure out, but it is an inherent part of what happens when you get a currency union. So other currency unions in the past had a similar setup, and a good example of that was the Soviet Union with the transfer ruble. So it's like a reserve asset. So Target 2 is supposed to be a payment mechanism, which means it's how central banks and banks transfer money to each other, right? But that transfer happens automatically. in order to try and keep the amount of money in the different economies in the Eurozone stable. By which I mean, if a Greek person buys a German car, then money goes to Germany from Greece. Target 2 is the system by which that money goes back again automatically, right? To try and keep money in Greece. Usually, the drachma and the Deutschmark would mean that you can only use Deutschmarks in Germany. So Deutschmarks automatically go back to Germany, right? And the drachmas stay in Greece. But when you've got a common currency, the amount of money can actually leave a country because it's shared. And so target 2 is the automated system of rebalancing the money flows. But that leaves the question, well then, if the money's going back, there's got to be the other side of the accounting entry. And so target 2 is also a debt. So when the Greeks buy the German car, the euros go back to Greece after making that purchase. And in target 2, there's a ledger that says the Greeks now owe the Germans euros because the euros have gone back again. So it's like an automated borrowing system. Now, when I say debt and borrowing, it's not like debt that, we usually use the word debt for. It doesn't cost them any interest at the moment. It never has to be repaid back. So it's not a borrowing. It's not accounted for as borrowing on any national sovereign balance sheets. It's off balance sheet. And it's part of this trade flow. The problem here with all of this is that these target 2 debts are escalating over time. They're getting, it's getting wider and wider. And the part of the reason for that is their shared exchange rate and shared monetary policy. Usually in exchange rate and monetary policy, correct trade balances. Inside the Eurozone, that correction can't happen. In fact, it leads to a divergence because the exchange rates don't move. Also, target 2 effectively finances, in our example, the Greek purchase of German cars because the money just comes back again. So it feels like there's no cost to doing so. And then, last but not least, the only way that the target 2 balances, the debt, can be repaid is if the trade balance reverses. So if the Germans start buying more olive oil, then Greeks continue to buy German cars. Then the target 2 would converge back towards zero. But that hasn't been happening because the usual mechanisms by which that happens, the exchange rate and monetary policy and economic reforms, hasn't been happening inside the Eurozone. So just as with other currency unions in the past, you get this divergence over time. And I keep emphasizing that word divergence because the euro was supposed to cause the opposite. It was supposed to cause convergence between the economies inside Europe. And the point is that even though they share a currency, that shared currency actually creates divergence. And that's what leads to a crisis eventually over time. It's why common currencies fail. Target 2 is like watching this problem in a mirror, by which I mean that target 2 is not the problem, but it's revealing the fact that there is a problem. Now, there's a big debate between just about everyone who's interested in these topics. They've all got different perspectives on it. So I've given you my one, but there's lots of people who still continue to say, this doesn't matter, don't worry about it, it's not going to be an issue. There's people saying this is the end of the world, it's going to be a total disaster. There's people who struggle to explain why it's happening. No one can agree on what it is. So don't believe me or don't agree with me. Read the book, see what you think. See if you agree with me. Read other people's perceptions of it. But my take is that it's a signal that there's something wrong. Actually, I want to add that Alan Greenspan also identified target 2 as a massive issue in a private meeting with actually some of my mentors around about when Trump was being inaugurated. So although my take is I haven't seen it anywhere else, I think it's quite clear that target 2 is a big issue. And I don't know if it's worth understanding because it's so weird, but if you go to eurocrisismonitor.com, I believe it's called, they've got an up-to-date chart of target 2 and you can see this divergence and you can see how much money is involved. And I think if you go and look at that chart, you'll realize that there's something big going on and you'll start to wonder what it is.
Yeah, definitely. I think I saw the chart in your book, and when you look at the numbers, like Italy negative 600 billion, and I think Germany was almost positive $1 trillion. There's just no way that can possibly, as you said, can possibly come together. So why do you think these people are saying it's not an issue? They must have a reason.
Yeah, they're employed to say that, I suppose. But it's very easy to, for example, is target 2 a debt? Well, it's not borrowed. and it doesn't cost interest at the moment. It doesn't have to be repaid. So, it's easy to say it's not a debt, don't worry, they're not going to call it in. Well, yeah. Another part of it is that Target 2 potentially may only matter if a country leaves the Eurozone, in which case that debt would come due. All right, no one's ever going to pay it. It's the theoretical abstract idea. That's why I say it's only a signal of the pressure inside the Eurozone, a signal of the growing imbalances. But unless someone does leave the Eurozone, then legally the whole thing need not matter. So it's very easy to argue away the points that I've been trying to make, and I make in the book, and that others make elsewhere, by twisting the meanings and implying, that there was actually a Bloomberg interview I listened to recently by, I think it's the head of the French central bank or French finance minister or something, and he was just twisting the vaccine arguments in the strangest ways. He was explaining how, it's if you go with the second dose, then France isn't doing much worse than America, or and it's the second dose that matters. And so they just twist the metrics by which they measure what matters, and that reminded me of the Target 2 debate. There was a court case about it as well, and of course in a court case you get the two sides, they argue each other's case, they're not arguing against themselves. So all of this has become a huge issue that remains very much hidden, and hopefully my book helps people realize that it is a big issue and it shouldn't be hidden.
Yeah, perfect. So, and if inflation were to sort of rise in the Eurozone, would that mean that the countries have to pay inflation on this Target 2?
If the interest rates on from the European Central Bank increases, then I believe Target 2 starts accruing interest, at which point it may start to matter. But if you accrue interest on a debt that you never have to repay, it cannot be repaid without the trade deficit and surplus reversing between the countries. So they couldn't decide tomorrow to try and repay some of it, even if they wanted to in some absurd situation. So that's like another good way of highlighting just how bizarre this thing is. But it's an inherent part of a currency union that you have to keep the amount of money within the economies stable. You can't just allow money to flood out of one area of the currency union into another. And so you have to have something like Target 2, which just creates this bizarre scenario. And one of the interesting twists in it is that, in a way, it amounts to Germany being robbed, by which I mean that they're accruing a debt, or they're accruing credit, so they're lending people the cars that they're selling them. They're not actually selling them because the money leaves Germany again. So if it doesn't ever get paid back with a reversal in the trade balance, then Germany hasn't actually benefited from all of that trade surplus in the end within the Eurozone. So there's a chance that the Germans at some point will say enough is enough, and the Germans don't like inflation. So inflation may be one of the triggers where they say, and this is what happened in the Soviet Union's currency union, but they say we're not going to continue the Target 2 transfers. We're going to close that down, and at that point, when money leaves Greece to pay for German cars, it doesn't come back anymore. So that's one possible way that the whole thing blows up. But I think it's so difficult to get your head around all of this that hopefully I've made it interesting so that people do try and research it. And I hope my book's the best way to try and introduce yourself to Target 2, because I struggled with the readings that I tried to make about how this system works, because, like I said, it doesn't make much sense.
Yeah, well, to be honest, when I read it, I definitely understood it. So I think I can't imagine I'd be able to understand it if I was reading it, as you said, a German document or something. So thank you very much for that. I guess we can go on to Italy now. So obviously it's a main point in the book. So why do you think Italy will be the straw that breaks the camel's back? I know you mentioned it a bit before, but can you go a bit more on?
I think what makes the divergence argument really interesting in the Eurozone, the idea that the Euro causes economies inside the Eurozone to diverge instead of converge, is interesting because the countries that boomed before 2007 have been struggling since 2007. And the countries that struggled before 2007 have since been booming, right? So it's the GIPs, or the pigs as they call them, and then Germany. So Germany's had a housing boom since the financial crisis. The exception to all that is Italy, which has just had a continuous bust. Right? So they've effectively had no economic growth since joining the euro. It's also worth noting that this is one of the facts in the book that always makes me laugh. Currency unions in Europe tend to fail when Italy and Greece leave them. Right? So it's the same country. It's not just that there's been lots of currency unions in Europe. It's the Italy and Greece tend to leave first. Right? So it's just what happens. And there's plenty of reasons for that. So the Italian economy, the political system, the financial system, the banking system, however you want to put it, relies on being able to devalue their currency. Just always has. Right? It's why Germans go on holiday to Italy, and it's cheap for them. That's why the German Deutschmark was so respected and feared in some places. It's just that the Italians adjust for their political system's flaws by having a falling currency. That's how they remain competitive. And they did remain competitive, and they do. They've got good export sector. It's really productive. But the way that happens, historically speaking, is this steady devaluation. Inside the euro, they're stuck with the Germans. So the devaluation doesn't happen. And so Italy is very heavily disadvantaged by that, by not having the pressure valve that they've had and relied on for so long. This is why Italy left the ERM with the UK. Right? This is why Italy devalued so many times throughout history its currency. It's just always been Italy. And it is currently, according to all of the political cycles and the banking system problems, the bad debts. If you look in the news today, there's discussion about the size of Italy's stimulus as a result of the COVID, and the EU's not happy about it. There was the whole Troika thing. Italy is the key. It's also the key because it's so big. It's such a big debt market, such a big economy. It's not Greece, is the way people say this. It can hold the EU to ransom. It can say to the EU, well, if you don't do what we want, it can say to the EU and the ECB, if you don't do what we want, then we're going to leave the euro, and it's going to cause the biggest financial crisis in history, I argue in my book. So they can hold them to ransom. They've got the size of their starting chips is very large in terms of the poker game. So I don't think they will fold in the same way that Greece did. What's another reason it's Italy? I think the Italians have suffered through what the people in the UK call the eternal recession machine for longer than anyone else, in the sense that they didn't have that boom that Greece and Spain and Ireland did before the 2008 crisis. So they feel like they've had this steady bust followed by a steady bust, with the 2008 crisis being that middle point, and now COVID struck them very badly and early. So they are the ones who are getting all of the attention. If you look at the target 2 balances, Spain is actually very bad too. But at the time that I wrote the book, there was loads of focus on the Italian political system. So there's a bit of showmanship in there about focusing on Italy, but it is just the worst one inside the Eurozone. It is just as likely that the Germans, this is what happened historically again, when currency unions in Europe failed, the Germans sort of start to enforce the rules of the Eurozone against the countries that are breaking them in coming years, with court cases or politically. And I think it would be Italy that would struggle the earliest if that were to happen, and would struggle first if that were to happen. It's sort of worth bailing out Greece to try and keep the Euro project going in German eyes. Italy, I think, would be a different... I am originally German, so I can speak about this a little bit. I think the Germans will not go along with bailing out Italy to try and keep the Eurozone going.
I think you mentioned in the book where you were talking about how sort of when Germany was struggling in the 2000s, so they were going through austerity and they sort of reined back a bit, but now that Italy's struggling, they haven't done the same. So there's sort of that issue that, hang on, we followed the rules and now you're just going against the rules that we've implemented.
That's right. And the big issue of that nature that I always remember is that where I was born, the local bank, so the German banking system's a bit weird, but the local bank had a cozy relationship with the state government, right? And as many German banks do. And so the state government was effectively supporting this bank. And the Southern Europeans said, this is unfair, you can't do that. And then the court case started, and I think just after the court case finished, the Germans were bailing out the Greek and Italian and Spanish banks, right? So there's this real deep sense of injustice in Germany of we did the hard yards. And I don't know if this is a fair comment or not, but the way they feel about it is, we did the hard yards. We reformed in 2003 and 4 when I was last living in Germany permanently, with the Hartz IV, it was called. And now it's your turn, and it didn't happen. But at the moment, the German focus is on the inflation comment you mentioned earlier. It's about the fact that the Germans can stop a bailout via the EU to some extent, but they can't rein in the European Central Bank so well. And it's the European Central Bank that's the key, I think, now to printing enough money to rescue the likes of Italy.
Yeah, perfect. And I'm going to go on to something different. So something that you mentioned, and we hear quite a lot, that sort of banks and some companies are too big to fail. So do you think it's the same for Italy, defaulting? Is it too big to fail? And is it something that the ECB will just continue to try to bail out, do you think?
I'm sure they'll try. The interesting thing about the too big to fail argument is that it's sort of played out with Italy and things haven't improved. So the too big to fail argument is that if you let something fail, it's going to cause a crisis. But if you bail it out, eventually something will improve and it'll pick up again and solve itself. That hasn't happened in Italy. Things don't improve. I mean, it's been a long time now since the euro was created, and it like I said, they've struggled with this endless recession. Effectively, I think there's been 4 or 5 recessions since the euro was created. I can't remember anymore off the top of my head. So it's sort of played out now. At some point in a nation, the politics starts to get a bit dangerous, and it looks like the leading politicians in Italy are interested and are willing to leave the euro. At which point they can solve so many of those problems. They can just decide they're not going to pay back the debt. It's denominated in euros. Our currency is lira. It's not our problem. They're not going to pay back the target 2 debts, obviously, either. So the political incentives start to take over. And then it's like, yeah, we're too big to fail, but we're leaving. It's not about whether you bail us out. We've had enough of this. We are leaving. And so that's why that's one of the key ways that the book predicts the whole thing could blow up, is if the emphasis changes from should we bail Italy out to we don't want your bailouts anymore, this is not working for us, we're gone. So that's one angle of the whole thing. The other is that if Italy leaves the Eurozone, well, what state is the Eurozone left in? And could it solve its own problems? And how would that look? My worry is definitely that the European Central Bank looks at this and just says, well, we've got no choice but to print however much money it takes to try and save Italy. I think that's what's starting to happen now. But that just moves the ball back into the court of the Germans to then say, well, the Germans can go along with what is illegal under EU law, monetizing deficits. Basically, the central bank printing money in order to pay for Italy's deficits. That's like the biggest German no-no ever because of Weimar, hyperinflation, all this sort of stuff. So, it's like an impossible situation as a catch-22. You're either going to force the Germans to kick you out, or you're going to leave. The too big to fail argument sort of gets iffy if you start monetizing deficits, because inflation is a form of default. Right, so that's historically how a lot of governments get out of having too much debt. They just print the money and prices go up, so the debt doesn't matter anymore. So that is one way that the too big to fail argument could actually play out. But all of the others involve, I mean, look at the Greek economy. It's really struggled since the austerity, and I don't think it gets particularly better. They haven't got a growing population to try and grow their way out. I mean, how much longer do people put up with it? And then meanwhile, you've got the example of Britain. And let's not get into Brexit, but there's I mean, currency unions historically failed. That's just what happens. So although it's a persuasive argument too big to fail, I don't know if it applies given to a nation given politics, and I think currency unions just do fail. Yeah,
definitely. I think it's something that you sort of just put off the sort of pain for longer, and then it becomes more pain, I think, and that's what we're seeing in companies and countries as well, unfortunately. So let's talk about sort of the aftermath. So if Italy were to leave, or if sort of Germany were to leave, would it sort of be just limited to Italy and the euro, or would it be sort of similar to Lehman's, and it would just be a global crisis?
Yeah, the book definitely argues that especially for the UK, because it's a global financial centre, would be hit especially hard. So we'd be talking about the biggest default in history, so bigger than Lehman and Greece, which are the two biggest defaults on record, I believe, from memory. So it would be probably the largest financial crisis ever. Usually when you get these sorts of problems, the outcome would be so bad that you get the world's leaders come together and say, well, what are we going to do here? And they come up with some sort of weird new fudge, some sort of strange system to prevent a crisis from happening. I don't know what it would look like. It'd be it's going to be very bad, put it that way. And every time you have fears of this happening rise, then stocks start to fall and Italian bond yields get into trouble. There's a few things that make it unique this time around, such as demographics. The fact that Italy's demographics are not going to improve, the population is not going to grow to try and grow the economy. So there's a lot of other things changing around the world that are arguably fairly unique. And so this is the first time that we've got the current situation combined with that, which adds a lot of unpredictable angles to the whole possible outcome. What tends to happen historically is that you go back to what was called a Deutschmark zone, by which I mean that you're left with the countries that do want to be in the euro, which tends to be Germany and a couple of satellites, Holland, Belgium, Luxembourg, Liechtenstein, and so on and so forth. That's basically what I would predict to happen again this time. They would be likely to try and bail out their own banks and banking systems, and each country would do the same internally. I'm definitely worried that Italy would be such a big default that you get, the classic 2008 Lehman Brothers style contagion. But it seems like central bankers and governments quite capable of offsetting the biggest economic crunch since 1700 something, and this pandemic and the lockdown and all the rest of it, without stock markets or debt markets crashing. So while central bankers are willing to print money to try and forestall these crises, it's very difficult to know how the outcome plays out.
Yeah, I have an opinion on that we're just going to see faster and faster crashes, sort of similar to what we saw COVID, a few weeks down and then a few weeks up, just because of how quick the government's going to respond, which is sort of what I'm thinking. But let's sort of move on to, so you talk about Germany quite a bit as well throughout the book. And there's sort of a bit of a crossroads that we're seeing with the retirement of Angela Merkel, and sort of there's uncertainty with the CDU leadership as well. Do you think this sort of brings a potential larger risk as well, that Germans might go a bit more extreme, sort of go towards Eurosceptic parties?
Yeah, there's definitely growing Euroscepticism in Germany. The AfD, the Eurosceptic party, has promised something on their manifesto. I can't remember if it's a referendum or to campaign against the membership of the euro or some sort of version of that. And the CDU still haven't decided who their leader is. At the time of recording, there's two possible candidates. But you've got to understand just how important Angela Merkel has been for so long. She's taken them through so many crises. I remember the TV ad or the billboard ad for the CDU, her political party, was at one point just a picture of her hands doing this, because that was her hands pose, in every sort of state photo, and she was considered such a safe pair of hands. So she's been iconic through this whole thing. And if she's gone, we don't know who we get instead and what their positions will be. But I think on the matter of Germany, the more interesting twist is actually the court cases. So what we've had in the last few years is a series of court cases at the German Constitutional Court, which argue that what the EU or the European Central Bank is doing in order to rescue Italy, directly or indirectly, is illegal under the EU treaties and under German constitutional law. And I think it's safe or fair to argue that each time the German Constitutional Court has come closer to declaring what the EU or the ECB is doing is illegal, right? So the last time round, they said that it hadn't been justified properly yet, and that it couldn't continue until it had been, and that if it wasn't justified properly, it would be a breach. So you've got to remember that the EU is not yet a federal system. It's a weird mishmash within each country of what that country's relationship is. It's a bunch of international treaties. I think there was a humorous event recently where von der Leyen was not invited to sit down next to, was it the Turkish ambassador or something? But Michel, I've forgotten I think Michel is his surname, was invited to sit down. There was basically a missing chair for who is supposedly the most powerful politician in Europe, the EU Commission. And the reason is because she doesn't actually matter as much as the nation states of Europe and what they agreed to. And that's what the chair was provided for the person representing the EU Council. So the legalities and the relationships between the different parts of Europe is really complex still and not legally clear. And one of the things we do know is that the Germans and the French at the national level politicians do play a key role in deciding what the EU and the EU Commission come up with. And so if they start to feel pressure from the AfD, or they start to worry about the German Constitutional Court declaring something illegal that the financial markets rely on in order to keep Italy's bond markets ticking over, then there is a very real possibility of a sudden panic. As we saw briefly when the German Constitutional Court ruled last time, there was a little bit of a panic about what does this mean? Could the bond buying programs of the ECB be illegal? I was recently speaking to Philip Bagus, who joined a court case against the EU's Coronavirus Recovery Fund, and they actually won an injunction. I think the term is injunction, but I'm not sure what the German or the English equivalent of the German word is, to prevent the German president from signing into law, from ratifying a law that passes that EU recovery budget, that coronavirus budget, in Germany. And so that's another example, that's the latest example of the German Constitutional Court and the German legal system starting to rein in the EU. And I think that will continue because the EU is, each time it's introducing a new policy, a new level of spending or money printing, it starts to get closer to those legal limits that the German Constitutional Court has imposed.
One thing that I noticed in the book, you mentioned Mario Draghi quite a bit, and he's very prominent throughout the book. And it's quite ironic that he's actually now the Prime Minister of Italy. So how do you think this will change Italy's movement away from the euro? Do you think it'll mean they'll stay in a bit more longer? Or?
Yeah, it's especially ironic. I couldn't believe it when they invited him to be Prime Minister. He's actually kicking up a bit of a fuss with the EU at the moment. They have refused to accept his proposal for how the recovery spend will take place in Italy of the EU funds. So he's become a bit of a Eurosceptic to some extent. But the Italian political system, as we've discussed, is a bit of a turmoil, generally speaking. They've had countless governments and prime ministers in, I think, the last century. So it's difficult to understand how things work there. And they've had this huge upset of these two new political parties since 2018 and before that. So the figurehead of the Italian government is a very vulnerable person. They're not connected to any particular political party and haven't been for a while now. It's basically technocrats. It's not like in Greece where the leader was at least nominally very Eurosceptic for a while. So none of this is new in Italy. And what tends to happen is that at some point the parties that have agreed to have the technocrat leading the government eventually decide that they no longer want that. It's very difficult to figure out why they accepted Mario Draghi, especially with the Eurosceptics. He was, at least at one point, public enemy number one in Italy, the traitor of that. And yet he was also the person who was the head of the division of Goldman Sachs that helped Greece fudge its numbers to get into the euro in the first place. So the history goes back. If you look at some of the other big personalities in the project, they're even more ridiculous and absurd that they're in the positions they are. And Christine Lagarde's the obvious one. She's a convicted criminal. She was convicted for financial negligence, for failing to question payouts to the French president's mates, basically, while she was the finance minister. And despite that, she was head of the IMF, and now she's head of the European Central Bank. And during a period as head of the IMF, she explained that they breached, I think it was the Maastricht Treaty rules by bailing Greece out. And she said, I think I'm quoting almost literally, that the Maastricht Treaty is very clear, no bailouts, but we broke all the rules. So, and that none of this is very new. We've got Jean-Claude Juncker's story about when things become serious, you have to lie. So it's all part of this continuous line of ridiculousness, but it does show just how desperate and absurd things are, and how advanced this problem is. It's also worth noting, though, that it's not wildly different in the US, where you've got the Treasury Secretary and the head of the Federal Reserve, or just the head of the Federal Reserve Bank of New York, sort of swapping back and forth in their positions at the monetary side of things and at the fiscal side of things. And I think all of this is a symptom of MMT, modern monetary theory, the idea that the central bank is really just there to print money for the government. That is actually its role. And I call it fiscal fanaticism. The focus is actually on the government just spending however much money is needed. So we've got the same trend happening, both sides of the Atlantic, and to some extent in our home country in Australia as well. So the particular person now in charge of all these different institutions, whether it's Draghi, whether it's Lagarde, whoever it is, it's just a signal that these elites, these people in control, are starting to lose control. And it's getting more and more absurd, and the actions that they're having to take in order to keep the game going is getting more and more absurd. And I think it also makes people ever more Eurosceptic. The fact that, the von der Leyen was appointed in the way she was to the head of the European Commission, the fact that Mario Draghi, no one voted for him, it's the same phenomenon going back in so many different places. The occasional decent bloke gets taken out pretty early. If you look at what happened in the history of the ECB, or what happened with Jens Weidmann, the hawks, the people who are more pro austerity and pro being careful, they just get kicked out of these institutions nice and early. So I think we're just left with people like Lagarde and Draghi, because no one else would be stupid enough to want the job.
Yeah, and I think it's interesting. Everyone you mentioned there has not been elected. I think that's quite interesting by the people. They've all sort of been given their position by essentially other people who have been elected, or which is quite amazing. So it has been quite doom and gloom, the podcast that we've talked about now, and how much it will affect people. So obviously, without giving us financial advice, how can the individual person protect themselves? I know you're quite a big proponent of gold. So yeah, what do you think on that?
Yeah, it's difficult. There's sort of four ways that I think about this. So you can play the story inside the financial system or outside of it, and you can be sort of aggressive and speculate, or you can be defensive. So it gives you the four combinations between those four, and I think gold is the best option because it serves the purpose of being an opt-out from the financial system. So gold's an inanimate object; it doesn't do anything. But history has shown that it preserves purchasing power over long periods of time. So when you don't know what's going to happen, you don't know if there's going to be a deflationary default Lehman Brothers style shock. You don't know whether the central bank is going to overdo it and there'll be inflation. You don't know which combination of these different possibilities it's going to be. Then just opting out is one of the best ways to go about preserving at least a big chunk of your wealth. And precious metals is, in my view, the best way to do that. So I definitely think about that at least. We've got something called the Gold Summit being launched at my newsletter Fortune and Freedom, which I write with Nigel Farage. It's daily, it's free. You can subscribe for free at fortuneandfreedom.com. And this Gold Summit's going to be talking about this sort of thing, where we've invited a long list of experts on the issue and on financial markets to talk about gold and how they see things developing. So if you're interested, sign up for Fortune and Freedom and sign up to the Gold Summit specifically once you've done that. We'll be showing you how at Fortune and Freedom in coming weeks. That's probably my focus in all of this. Everything else is quite risky in my view because, so for example, people who speculated that 2008, that crash would happen, but they found out that it was Lehman Brothers on the other side of that trade, they didn't get their money out. So even though they were right about everything, they didn't necessarily profit from it once the dust had settled. So being speculative inside financial markets can be quite risky. And then you should never, have all your eggs in one basket. You should never pretend that you're sure about what's going to happen. I thought this crisis was going to blow up in 2018, and it didn't. And I think we're still steadily going towards it. There's inherent flaws in the euro that will mean there will be a crisis. Figuring out when it goes and how it goes is a lot more difficult. But I think the book is really good for explaining why it can't last. It's very difficult in a book like that to tell people what they should be doing with their money because there's so many different ways it could yet unfold.
Yeah, perfect. And you mentioned Fortune and Freedom there, which is actually how I learned about yourself. So what is the mission for the newsletter and sort of why should someone look to subscribe to it?
Yeah, so we've been thinking for a long time about how similar the Brexit story was to what we try and do at South Bank Investment Research, which is the publisher of Fortune and Freedom. So South Bank has a whole bunch of newsletters, and they tend to be about going against the establishment. We focus on the financial establishment, whereas Brexit was all about going against the political establishment. The majority of people in Britain, or at least the majority of the voting population, wanted Brexit to happen, and I think that's been true for a long time, or at least they've wanted a referendum. But the political class never delivered it, and we sort of see a lot of similarities there. So then Nigel Farage decided it was time to launch a financial newsletter, and we were happy enough to be working with him to do that. And the focus has then just become more obviously this idea that we're going to take on the financial establishment, and Nigel Farage, having taken on the political establishment, is going to now take on the financial establishment to do that with us. And he actually has a lot of financial background. He taught me a lot about the things in how the euro dies. I learned a lot about how the financial crisis in Europe, the European sovereign debt crisis, played out from him, from YouTube videos like this about him. So it's bizarre now that to be writing about what I see as the next European sovereign debt crisis with him, and doing that together with him. So, and even if you're not a Eurosceptic, but you understand this idea of challenging the financial establishment, then I think you'll enjoy Fortune and Freedom. We disagree between each other at South Bank and between Nigel and myself a lot. So it's not, there's no corporate opinion, there's no line to toe or anything like that. And it's all about these ideas being debated and discussed. And I think Nigel supports this idea that things get better with debate and discussion, and that's been one of his, I guess, is part of his ethos to debate things. That's why he's against the European Union, the European Commission specifically, of course. So it's basically that same mentality that made Nigel famous and made him successful transferred over to financial markets, and telling people the truth as we see it, what's really going on, what's really happening, what the establishment isn't telling you, where they're wrong, what might go wrong with what they're telling you. So all of these twists and intrigues and different ways of seeing things to what you get told about. And hopefully the Gold Summit will be an example of that. Very few people would believe that gold has outperformed the stock market over the last 20 years. But so we like telling people about these things, these surprises that they don't often get told about just within the financial sphere instead of the political sphere.
Okay, perfect. And then on to the last question. So if a reader could take one message away from the book, what would you want that to be?
From the book, I think it's still that anyone who understood the history of currency unions, especially in Europe, would expect the euro to fail. That is the default expected case, just based on historical track record. So this shouldn't be a surprise, given how many times it's happened before. That's what I learned from writing the book. And I think that is the most powerful chapter, just in making people realize that you might disagree with me, you might think the euro is going to last, fine, fair enough, but it would be a surprise exception if it did.
Okay, perfect. So if people wanted to hear more about your opinion or what you have to say, where would they be able to find that?
Yeah, fortuneandfreedom.com is the best place to subscribe. Like I said, it's free, so have a look, see if you're interested, and if you aren't, you can just plug in your email address, and that's it. You'll get a message from myself every day, or from Nigel Farage. We do a video every Friday as well, and now's a good time because you'll be seeing the Gold Summit, or you'll have a chance to subscribe to the Gold Summit, which will also be free. And we've got these experts from right across the financial industry. So if you are interested in what I've been saying, and I believe gold is the best way to benefit or to protect yourself from what I've been saying, now's a great time to become a subscriber.
Okay, perfect. Thank you so much for joining us today, Nickolai. I really appreciate it.
Great pleasure. Thanks very much.
Cheers.